Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at some of the small caps that were in play today. And so first up we're going to look here at IFMK. So this is a consumer staples stock. It had been in a big downtrend. It had very low average daily volume. As you can see here on the 30th there was a volume spike. That's what we call the front load. Okay, that was traders that were loading off this bounce here, taking positions before the big rally, and then it pulled back, and then boom, you've got the big pop today. It closed today above the middle Bollinger Band at 377. If it can stay above that level, a new uptrend could begin. Notice how this dotted purple line has been resistance since support broke way back here. So back here in April, and so if it holds, that's going to be very bullish. The next key level to break is going to be this 50-day simple moving average at 490. It's going to need to close above that level to head higher. So yeah, so keep an eye on IFMK. We're going to see if it can get a new uptrend going. If it does pull below that middle Bollinger Band at 377, that would be a sell signal. Okay, so take a look at this on CNBC. You've got this video I recommend watching here about CHRT, the consumer staples, healthcare, utilities, REITs, and telecom. So these are the sectors that are in play right now. You can just go to CNBC, put in CHRT, and you'll be able to see that video. What you're going to find is a lot of the stocks that are running right now are stocks that are in that sector. So there's been some sector rotation going on, and so yeah, you're finding that in the small caps, that a lot of these small caps are in the sectors I just showed you are the stocks that are currently doing the best. So keep that in mind. You know, it always helps to be in the right sector, and then you find the stocks that are running within the sector. Okay, so look at EGLT here, closed up 36%. Yeah, if you look here, it's breaking out above this downtrending channel. There's descending resistance here and descending support, which it broke below and bounced off of. And then today it busted through the descending resistance line, and it also closed above the 100-day simple moving average at 53. So those are going to be the two key levels to turn into support. Right now it's above this prior support level from back in April. You know, many times that will turn into resistance. It did close above, so it really needs to stay above 58 here. And what you're looking for is a run up here to that 200-day simple moving average, basically at 75 cents. That lines up with the closing price on May 7th, the high close from May. And so 75 is going to be a huge resistance zone. Failed to break that level when tested, that'll signal a temporary top. It needs to stay above this 53 level. If it dropped below, that would signal consolidation. You could see it drop down to 46. Okay, take a look at VCEL. Closed up 25% today. So yeah, it did well after the gap up open. You know, it reported earnings last night and then pushed higher. It did hit this 1325 zone and pulled back. It's going to need to bust through that. You can see there's some candles right here. If it fails to get to this 1325 to 1350 zone, the candles could work back into the bands. Today's candle is floating above that upper Bollinger Band. The upper Bollinger Band's down here, lined up this purple line with the 100-day simple moving average at 1168. Those are the two key levels to hold on the pullback. You do not want to see them dropping below. That could put up the 50-day simple moving average and EMA 4 on deck. You know, the candles could work back into the bands with this setup. What you really want to see is that push through 1350 and a run up to this 1550 or 1450 resistance zone, which is the closing price on May 21st. Okay, take a look at Jones Energy. Closed up 32% today. Ticker symbol JONE. Very nice move. You know, this one is taken forever to heat up. You know, it made the move back here in June, way back in June, when it had that big volume spike and the big run to that 50-day simple moving average, the green line there. That was you know, an attention getter. You know, it back here in May when it got to the green line, it failed to close above, and so the green line had been major resistance, and today was the first close above that level for many months. You have to go off of this chart to find the last close above the green line, which is the 50-day simple moving average. So it faked everybody out in June. Today it finally closed above. You know, once again on a volume spike. You know, this was the largest volume so far in August, and the largest volume bar since this July and June bars. So yeah, the bulls are trying to take control here. You have the PSAR bull flip. It's all about staying above 38 right now. If it dropped below 38, that would be a red flag. It needs to stay above that 50-day simple moving average. And then you have these candles here that all close closed in this 4250 resistance zone. You want to see the candle stay above that level as well. That's lined up here with the 425 level, the upper Bollinger Band. You want to see the candles bust out above that resistance level, turn that into support, and then you're looking for a run up here to the 50 or the 100-day simple moving average, basically at 55 cents here, 546, the gold line, and that's also lined up with this descending resistance line. So this 55 level is going to be a big resistance level to break. It failed to break when tested. That could signal a temporary top. Okay, look at CWBR here, closed up 34%. It's a thinly traded stock, but it did have a big bounce today, and it has had volume in the past. I mean, look at the big volume, but when it was dropping here, had huge volume right when the downtrend started, and then now here you are at the bottom where it has the best volume spike since that day, since the downtrend started. So notice that this red candle right here, there was a close below that dotted purple line. That's the 20-day simple moving average, which is also the middle Bollinger Band. And candles forming below signal the possible start of a new downtrend. That's exactly what happened here. And so today, there was the inverse of that. There was a close above the dotted purple line, above that 20-day simple moving average for the first time since the day before this candle right here. This was the last time that there was a close above that level, and then until today. And so all these candles were below the 20-day simple moving average today. That's a bullish change in trend. It wasn't quite the volume spike that happened in June, but it was the largest volume day since that day. So that's just telling you the chart's really heating up. It broke above major resistance levels. Notice how they drove it down, and yesterday it had closed below that 300-day simple moving average. They drove it all the way down to the bottom of the support level on the chart. Boom, popped it back above. It's above EMA's 4, 8, and 13, the middle Bollinger Band, the 100 and 200-day simple moving averages. Right now you want to see it stay above 615. That's the gold line. The big level of break is going to be up here at $7. That 50-day simple moving average, the green line. So that's the next target. It's going to need to close above that level to head higher. Okay, take a look at EKSO. If you look here, it closed up 28%. So that was a really nice move today. So this has this uptrending channel here, and it's been hitting this red descending resistance line and breaking back below. That there was this one time it popped above right here. I was seeing that there's a solid resistance line across these candles here, and even if you draw a line across the tops of these candles here, the move today was above both of these levels. So this is looking like a clear breakout above the top of this multi-month channel. So this is a very strong technical move, and especially when you combine it with the large volume spike. Look at the volume today. This is the largest volume day since way back here in November, and so look at the run it had in November. It went nuts in November. That was a major multi-bagger. So, this could be the start of a next push. We'll see that. That's some big volume. It's breaking out above major resistance levels. And then also it broke above this black line, which is the 400-day simple moving average. So the key now is to stay above all these levels. You really, it would be best if it stayed above 209 right now, 210. That's going to be the best. Get above 240. You've got this 260 level. And then you have this about 285 or so right here, and then you're looking at if you're a bull, what you're looking for is the jar to get filled and a move back up to the prior levels. I'm not saying this is going to happen. I'm just saying this is what you would want to see happen after a break above a channel or whatever. I'm not saying it's going to happen in one move or it'll happen at all. I'm just saying that this has that fill the jar kind of look to it, and so if it can break above these levels here, this 285 level, it might make a run higher. Yeah, you just have to keep following the charts. This is a very nice start, so keep an eye on the EKSO. Take a look at FBIO here. Okay, closed up 19%. Notice our RSI is above 30. It had been below 30. Now it's back above. That usually is a buy signal. Above 20 on RSI after trading below. Notice how it was below for multiple days. These are signals that the stock is heating up. It closed today above EMA 4. That's the pink line. The last close above that level, basically I would say you have to go back here to the last time it closed above the middle Bollinger Band, which was the first week of July. This is a super ugly chart. When you have really, really ugly charts like this for small caps, Usually, the zebras don't change their stripes, and there's going to be more pain and suffering. But you do get what's called short cover rallies, and so you'll get a bounce off the bottom. The shorts cover, you get a run up, but then usually it stalls out. Many times it is that middle Bollinger Band, which you can see all these candles hit that level, and they fail to break because it's the top of the downtrending channel. For stocks that are in a downtrend, the lower Bollinger Band, which is the solid purple line, is the bottom of the channel. Notice when they hit the bottom of the channel, they'll bounce off, or they'll just ride that level lower. The bounces are off that level, or they ride it lower, or right now it's trying to bounce off the lower Bollinger Band, and they work their way back up to these moving averages. Fail to break the moving averages, and it's a sell zone. It triggers a sell signal. What I like to do is as long as it's staying above the EMA 4 on the bounce, then you can ride the bounce. But once it goes back below, closes below EMA 4, that's going to be the sell signal. Okay, so you want to be able to ride it higher, but if anything that closes below EMA 4 on the daily chart is a risk to hold long. So keep that in mind. It doesn't matter if it's Bitcoin, if it's a commodity, anything that you're charting and you're long, and you're holding and it's closing below EMA 4 on the daily chart, you're taking on a considerable amount of risk. Okay, now this is a bounce play. Remember, dead cat bounce plays are the riskiest plays you can make, but you can make percentage gains if you trade it correctly. Right now it has to break above 210. If it gets above 210, you have EMA 13 at 224, and then if it can get above that, then you have that middle Bollinger Band at 247. So it has some potential to return some gains if it did get back up to that middle Bollinger Band. But keep in mind, if it drops below $2, that will be a sell signal. It's all about the close. It has to close below EMA 4, but if you see it's going to close below EMA 4, or if you're using a mental stop loss and it drops below that level, many times it's best just to exit. You can't mess around. I mean, if you look at that chart, how deadly that chart is to be long, you don't want to mess around and get caught holding if it goes back below EMA 4. Okay, look at ZIOP. Closed up 17% here. So yeah, so this stock has been in this big downtrend, and right now it had a nice bounce down here. It looks like, yeah, that looks like the open is above the previous close. Let's just look real quick here. Open previous, yeah, it's just 1 penny, but that 1 penny difference changes the reversal pattern. It could have been bullish engulfing the reversal pattern, but since the previous close was 226 and the open was 1 penny higher at 227, that formed a bullish one white soldier reversal pattern. It's just semantics, it's a reversal pattern. They're very close to the same. Bullish engulfing is one of the stronger patterns that you will have. A lot of times you'll get follow through with that type of pattern. What happened today is it closed back above the EMAs 4, 8, and 13, and what you're looking for is a close above that middle Bollinger Band. If you see it trading above 274 and it closes above that level, it could really get cooking. You have the 50-day simple moving average way up at 337, and you have the upper Bollinger Band at 333. So yeah, so keep an eye on it. It has some volume. You know what I mean? It has 2.5 million shares at 266 a share. It's got good money flow. It has a PSAR bull flip. You have the MACD bull crosses here on both time frames, and so that the MACD bull cross on the 8-13-5 signals it's heating up, and having one on the 12, 26, and 9 is usually a really good signal. But we'll have to see. The previous bull crosses, this one didn't pan out, but it's an early signal that the chart is heating up. Okay, take a look at INPX, closed up 17%. This is a Bitcoin blockchain crypto stock. Okay, and so keep an eye on it. It hit that middle Bollinger Band and it pulled back. I mean, another ugly chart. Look how they never let it get above that middle Bollinger Band, or if they do, they suck it right back below super quick. I mean, it's very unlikely. History repeats over and over again, and that's what makes charting. The more that you analyze stocks and check out charts, the more you see the patterns repeat over and over again, and the easier it is to identify certain patterns in the market that tend to repeat. And so for this stock here, this has that classic dilution pattern, you know, where they just have such bad financing and they're dumping shares to pay the bills that they just can't help themselves but not let it get above that middle Bollinger Band. The algorithmic trading programs are obviously set not to let it turn that level into support. You know, once it does, it gets above 15 and that level holds, that's when it could get an uptrend going. Okay, until then, until it gets above that middle Bollinger Band, it's going to be more downside risk. You can play the bounces. There's some good money to be made if you can time the bottom and then exit at the middle Bollinger Band. But keep in mind, the middle Bollinger Band is always going to be the sell zone if it fails to close above and turn into support. Anytime it closes below EMA 4 at 13, that's going to make it a risk to hold long. Okay, look at ICON here, please. Check this out, up 14%. Keep an eye on this one. It closed above the middle Bollinger Band. It looks like it's trying to heat up. If it could break above this descending resistance line here, it's lined up with 64, which is also the 50-day simple moving average. It could really get moving, and so 64 is, in my opinion, the magic number for the stock right now. If it can break above that, it could possibly run up here to the 100-day simple moving average at 77. If it drops below 59, that would be a sell signal. It needs to stay above that level to remain in play. Okay, take a look at IMMY, closed up nearly 10% today. So this is a breakout play. So yeah, it's breaking out above this, you know, it had the multiple tops here. Notice how this was a big resistance zone, and then today it finally broke out higher. And so anytime you have a multi-month, you can see this is the horizontal support, horizontal resistance. It's pretty much a sideways channel here. This is the top of the channel. This is the bottom of the channel. Broke out of the top on a huge volume spike for this thinly traded stock. You know, very low average daily volume, and so many times that signals more upside potential. If you look here on the INMY weekly chart, you can see here it's breaking out above that gold line. That's the 100-week moving average at 247. If it could turn that level into support, then it should be able to keep this uptrend going. It's been in an uptrend here since back here on the first week of January. You know, that's when it started turning this middle Bollinger Band into support. That was the first close above that level since way back here in June of 2017. That kind of started it all. It took a little while to get going, but it is in an uptrend. It's above the green line, which is the 50-week moving average, and now this is the first break above the 100-week moving average in years. You know, it's you have to go off this chart, and so this is a very, very strong move this week. It should not be ignored. If it can stay above that level, you could see it move up into the threes here, possibly up to this 3 to 310 level would be the next big level to break. Okay, take a look at, let's see here, let's see, did I have the weekly? Okay, SENS here. Okay, so it closed up 4%, not a big move today, but this chart has been heating up. Keep an eye on this one. It looks like it's trying to start a new uptrend. You know, it had this falling wedge type of pattern, and you know, you have the descending resistance, and then you had descending support here, you know, and they were coming into a flex point here, and then boom, it busted out of the top of the descending resistance line on this white candle on the first trading day in August, and then it got above the middle Bollinger Band here and above the 50-day simple moving average. These levels have been turning into support, the green line and the dotted purple line, and if it can stay above $4 here, it should get a new uptrend going. Right now, you want to see a break above 430 in this upper Bollinger Band. If it can get above that, 470 will be a big target, and then $5 up here at this high close from back here in June. Okay, so that's like the 21st of June at just below $5 would be the ultimate target to the upside. You know, that was the high close, like I said, back in June. If it did drop below $4, that would signal it's not ready to go. That would be a sell signal. Okay, take a look at MNKD. This closed up 10%. I haven't charted this one in a long time. It had a huge pullback. It had a huge drop last week here on Friday with a bounce with the long lower wick. Many times that's a signal that bounce players are loading. It found support yesterday, and it's holding this dollar level, the dollar range, and then today it bounced back above that. What has to happen now, it needs to break above EMA 4 at 118. For dead cat bounce plays, that's always the sell zone if it fails to break. So if you see that level hit and then it fails to break above, you know that's going to be a temporary, you know, a top. You know that it's been riding this pink line lower the entire time. The bonus would be if it could break above EMA 4 and you could get a run up to EMA 8 at 130. You know, that would be some decent percentage gains here, some nice percentage gains. But yeah, keep in mind this is a super risky stock. It did close at high of day. Notice there's no upper wick on today's candle, so it was very bullish into the close. You know, it's bouncing on much lighter volume than the drop, but you know, it looks like the last two candles did form completely below the lower Bollinger Band, so the candles are working their way back into the bands. So keep an eye on it for potential break above 118. Okay, take a look at CXRXF. Yeah, take a look at this one. Was this one the bullish engulfing one? No, I guess that was another stock. But yeah, this stock here, keep an eye on it. It has no volume. This is going to be the last one in this video. It had only 17,000 shares in volume, but check out how it closed above the middle Bollinger Band here. Okay, so it closed above that, and it's hitting the 50-day simple moving average. You have to go off this chart to find the last close above the 50-day simple moving average at 20 cents. So if it gets above 20 cents, it could get moving. So you know, it has to have volume, obviously, to be tradable. Right now, it's not liquid to be tradable, but it's just something to keep an eye on. As you can see back here, you know, it did have some volume in May and in June. So you know, it looks like some people did possibly load down here, and they might try to run this thing. So keep an eye on this odd ticker symbol CXRXF for a potential break above 20. The F they put on OTC tickers when it's a foreign stock, okay, when it's a foreign company. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please check out the chat. And yeah, you know, check out this video, the chart video. All right, thank you.